So welcome. In this video, I'm going to be going over my 2022 Wealthsimple dividend progress of my portfolios and 2023 goals I aspire to in the coming year. So first, we're going to talk about the accomplishments of the accounts over the past year. So the accounts reached over 15,000. This, as we keep on accumulating funds, this will increase over time and get easier to accumulate. We received 62% month over month average of dividend growth. So that's a little bit misconceiving, but this should go down over time, but remain. Our goal is to have this maybe around 35 or 40%. Right. So 46 cents per hour dividend wage. So that is over the course of the whole year with 2 weeks of 50 weeks, 2 weeks of holiday. This is what we're looking at to grow over time and to replace wage or any income that we receive. Increased contribution to RSP. We started an RSP account halfway through the year and started to contribute with that into it. We put in some American ETFs. I will be going over the portfolio at the end of this video to stay up to date on what is going on. And I did manage to track all of my dividend income over the course of 2022, which is the first full year that I've done that. So that is interesting to see how everything has panned out over the course of the year. So as we grow our dividend income, we should be able to get some snowball effects and be able to buy more dividend stocks and allowing us to grow our accounts over time. And that is the whole goal of these portfolios. And since I tracked this over the course of the last year, we 2022 was pretty rocky for most of it, but we did get to see some of the ups and the downs of the market, and especially the funds we received in the meantime, which is our priority in these accounts. So, just for a comparison, the S&P 500 was down 18% in the past year, and this is one of the indices that is trying to be beaten by many professionals every year. So 18% was negative 18% was the target to beat. So the Dow Jones was a lot better. It was 18.6% down compared to the S&P, which this is composed of more dividend payers, more slow growers, and industrials. So that's a little bit interesting how these ones performed a little bit better. And the Rocky Nasdaq composite was down almost 31%, which contains lots of tech and maybe some high risk companies that have not performed up to their standards quite yet. So our portfolio, this is the TFSA, which is our largest account by far, and just for comparison, this account was down 12%. So we beat the S&P, we beat the Nasdaq, but did not beat the Dow Jones. So that is something to consider. Well, we did have a little bit of a fall of Algonquin Power at the end of the year, which did impact this stat a little bit, but we have to take that into account for sure. Okay, so our cumulative dividend income over the past, so this does include 2021 a little bit, but from January to now, we see this decent trend line of our monthly incomes, and our highest month continually got increased. With some in the later part of the year, I did start to rebalance part of the portfolio, and that's why we see a little bit of a change in these numbers. But we are trending upward, which is a priority in this strategy. So this is our monthly income, yes. So we $59, $91 was the high in July. But we see that this is the 62% month over month average I was talking about. And since these values are so low, this is a little bit biased and misleading, but as we collect more data, this should become a more interesting stat to focus on. So these are interesting things for the first year being done. So that brings us to 2023, and I'm fairly pessimistic about the next coming year due to inflation and some interest rate hikes. But so this is what we need to consider going forward, are realistic goals and expectations for the coming year. It's going to be a pretty uncertain outcome, but there's no reason that we can't navigate it in a strategic and thoughtful way. So our 2023 financial goals, first up are the contributions. Now, this is something that is maybe something tough for individuals to wrap their head around. It's tough to save enough money to invest on large quantities and see decent returns. So in the TFSA, I'm going to contribute $100 a week and $300 a month in the RSP and $200 a week in the taxable account. My priorities are set on the TFSA and RSP because they are tax advantage accounts, and they do return. They give you tax breaks on a lot of things. TFSA is very important in this strategy over the long term. So that'll be $780 a month, which comes out to be $9,360 per year. And I think this is very attainable. Some people might earn more, earn less, but setting your own goals is very important so that you can stay on track for the whole year. So under $10,000 is what I aim to contribute to these accounts in the coming year, and I might overshoot that, and I'm hoping I do, because these accounts they're very beneficial for my retirement and for my life. So so in totals, these accounts, I want the TFAs to be about 18,500, which would be a 1.5% gain over the next year. And this is what I was talking about, being very pessimistic. Markets average between 8 and 10%. I am aiming for 1.5% in this averaging into the market throughout the year. I believe that the 2023 is going to be negative. So if we can come out positive after all the contributions, I would be very grateful. RSP will be about $5,800, 3.5%. A little bit different because there's U.S. markets, U.S. equities, and assets held in the RSP, so they might perform a little bit differently. And the taxable account, I want to be at 3%, and these are kind of arbitrary because this fund is pretty low. So in all, I want the account to total $26,000 at the end of 2023 with maybe a 1% gain. And I think we will beat the market with a 1% gain. And some people might not believe me or like that, but maybe we'll have 5, 10, 20%, who knows? But I think it's going to be negative year, and being positive will be very beneficial for these accounts as we contribute into them. So next up is just simple savings, and I want to save $100 a week and end up with $5,200 at the end of 2023 contributed. And this is simple. The more money we have, we can play with, invest into larger market sell-offs, or even buy other assets if they come around. So savings is very simple. This $100 a week, I think, is not that bad. So in total, that'll be $5,200 of savings and $9,300 in investment contributions, which will be about $14,000 over the course of 2023. So I think this is very attainable, and we can reach this with a proper decision making and discipline, I believe. Okay, so some other goals I do want to accomplish in 2023. I want to make better content here on YouTube. I want to be more consistent, and I want to perform with better quality. I think I have a lot to add to this space. I do have a math degree, so it's a little bit different insight into investing than maybe someone that comes from the finance background. So I want to share my thoughts and experiment with these markets, and there's nothing wrong with investing in ETFs and mutual funds. They might even perform better than I do, but there's something very satisfying with learning these skills in investing. I want to be closer to my audience. So this is a question for you. What kind of videos would you like? I've done ETF and stock reviews in the past. I've done many portfolio updates. I have not done much current news or personal finance. So let me know what you would like to see if anything sticks out. I'm open ears to grow this channel and share my ideas and thoughts with the audience. So let me know what you think. So something every investor I think should be aware of is how to improve your portfolio quality. And there's some interesting things that I want to review and look back on. Um, First of all, is where you are investing. I am located in Canada, so majority of my portfolio is in Canada and some in America. So mostly all in North America. That is interesting. Maybe there's ETFs and other things that in Europe or Asia that might be beneficial to my portfolio. That is something that an investor should be aware of. So I want to be open to other investments around the world, and I think you should too. The next thing is market cycles. I haven't really paid much attention to market cycles. I don't know much about them. This could be, beneficial in investing in certain types of companies in maybe agriculture. I'm not sure, and energy maybe. Um, so this is something I want to learn more about, and I will look up and read and listen to you guys, hopefully too, on how to navigate market cycles. Um, and tracking your portfolio, I think, is very important. I've dedicated a lot of my time to making a good spreadsheet to be able to see my portfolio and my analytics. I will be sharing that at the end of this video. And I think it's very beneficial for someone to go through the portfolio. Maybe, it depends on how, if you hold ETFs or stocks, but if you hold stocks, you should be regularly seeing your analytics and seeing where your investments are and if you need to rebalance at all, because or else you should be holding an ETF where a fund manager will rebalance for you. So I believe tracking is very important if you are looking to pick your own investments. Yeah. And and in my portfolio, it's going to come down to picking companies I believe that are um, projected to grow, but also are a little bit defensive in the sense that they are well established, they have good cash flow, lots of resources, and are diversified in the sense that they're not pulling from one source of income. And I believe with that attitude, we can find stocks that do outperform a normal, typical stock in that industry. So that comes down to knowing what you're looking for in a company, knowing maybe types of statistics to look up and to know what they mean, um, but also to know the business model that they are performing. If you even understand that or what they're selling, I think that's very crucial to knowing what the company is valued at. So that's something I want to emphasize throughout the whole year and not deviate from this plan of collecting decent stocks at good prices. Okay, so for my portfolio, currently the Wealthsimple portfolio stands at 15.5 thousand dollars Canadian, and this is that same TFSA graph of 12% negative in the last year. I do hold another RSP with Royal Bank that holds some income funds that I do include in my spreadsheet. So this is a little bit different when you see it on there. It'll say maybe like 16,000 something. So that's something to be aware of. I will be tracking this Wealthsimple, these three accounts on Wealthsimple, because it is very easy to open up an account and to know how to use the platform, since it is its priority is the mobile version, and I think it's very good for a small investor looking to dollar cost average into the market. So let's go look at the portfolio. I'm going to be recording this as transparent as I can be. That is something I want to value on this channel, is being transparent and not giving any fluff to the audience. So the first account I want to just quickly go through is the personal account. This is the taxable account. This is not the priority of my portfolio. I've even withdrawn some money to put into the TFSA, because that is a little bit better tax advantage. So in here, I only hold one share, just under one share of Berkshire B, and one share of VTI, which is a total stock market ETF. That's all is held in here. Nothing too fancy. Currently 500 USD, and that is also why I am a Plus member, because I want to be able to compound my US stocks and dividends as well, and that is in my RSP here. So currently $1,500 US in this account. It holds some ETFs such as QQQ, one share, SCHD, two shares, just under two shares of VOO, and just over two shares of VTI, similar to the VTI is also in that personal account I just described. So a little bit more generic here, encompassing most of value and growth in the RSP account, not focused to dividends whatsoever. But maybe we could start looking at some U.S. equities to that might be attractable at the prices the market is trading at. So, and that leaves us with the TFSA portfolio with 15 positions. This is the main portfolio right now, and I started this back in March of 2020 and put in a couple $1,000s, all I could afford at the time. I was a student. So, and gradually just increasing the contributions, and it's been rocky the last couple months or so. As you see, it was pretty steady there for a while. So just a quick overview here. Algonquin Power was by far our worst performer. They reported very poor earnings on acquisitions. They sold some asset, I believe. So Algonquin Power, Bell, and I have started some positions with some of these companies that I want to get into. So Bell is one of them. Bank of Nova Scotia is one I would want to keep an eye on as well. Champion Iron was our best performer of 2022. Unfortunately, I only had maybe $150 invested into them, and they were up 62% this year. So they are trading fairly high right now, and so this is maybe a selling point. And they look like a very cyclical company. So that's a very interesting one to note as we look to rebalance for the coming year, right? So next up is the Canadian CIBC. This is another one I want to start averaging into. Amera, another one too. This is they have a very decent payout ratio, maybe 60-70%, compared to maybe even its competitor Enbridge, which is well over 100% a payout ratio for their dividends. That's concerning to me, and I'll go over my how I track my allocations. I will go over that in my spreadsheet. It's very important as you look to rebalance your stocks that you have in your portfolio if you want to change, if a company's prospects differ from year to year, right? So Fortis is another one. They pay decent dividends and they're pretty steady. They're one of the main holdings in this portfolio. Go Easy is an interesting one that I didn't quite understand it when I first started investing into it, but I have just held on to it for now just to see how this pans out. I don't think I agree with their company, but we'll see going forward. Maybe I'll update this position in the future. We have Manulife. This is one I'm going to average into. Manulife Financial, so they're a bank and they sell insurance. Power Corp, they own insurance and Wealthsimple. And Pembina Pipeline Corporation, another one I'm going to average into. TELUS, this is a bigger one for this portfolio. I think it's an interesting one with a higher payout ratio. They're traded fairly low here though, so we'll see. TC Energy, and VDY, which is the main ETF in this portfolio. So VDY is one of the bigger ones in this portfolio. I have 76.5 shares. They pay like a 4% yield, and I did do a review in the past. It is maybe a year old, so if you want that to be updated with their current holdings and allocations, let me know. But they hold most. I think they hold all Canadian companies that pay dividends. So I do see if it shows it here. It doesn't really. I do have a reoccurring purchase of this ETF every Friday for $20, which is about half a share. So this is something I want to be always buying no matter what the price is. It seems a little bit silly, but I want to compound how they pay about $13. So I want to be able to compound what they pay in dividends into itself. So this is one of the larger ones in the portfolio. And I contribute, like I say, RSP, $300 a month, TFSA, $100 a week, $20 of VDY will be purchased every week in the TFSA, and the personal account will just accumulate funds in there for now. $20 a week, and maybe we'll enter some positions that are maybe more long term, and we can decide what to do with the taxable, because we have to be a little bit more strategic and careful with this account, since it does it incurs capital gains and income tax on dividends. So this is something that we'll be keeping an eye on in 2023. So this is the spreadsheet I've created to track my investments. So this is the front page. This is the dashboard. Account value is $16.9 thousand. This is because there has been extra money contributed into the RSP and with my Royal Bank account. It only holds JEPI, so that is, if you want to know what is just held in there, it's just JEPI, which is JP Morgan's income fund. We can see our cumulative dividends. We can see our weightings of our companies, and this is what we've allocated for the company and what we actually are holding in the account. So I have every position here, and you can see which ones we're overweight and underweight. We're underweight cash right now. We're overweight Algonquin by a lot, right? So there's a lot of things that we can look at here when we are rebalancing. We can also see how our positions are looking, whether it's in the profit or in the negative, right? Not too concerning, because we can just look at our positions tab that I have created here. So again, this is just tracking dividends, forecasted dividends, actual dividends, yield on cost, that kind of stuff. The one thing I am concerned about is allocation, this column, and the actual, this column. And this is what the shares, what we've allocated, will determine how many shares we need to buy of that particular company. So VDY, with a 25% allocation, we should be holding just over 100 shares. We currently hold 76.5 shares. So we need to aim for that 100 share mark, and we can do that with all of the companies down the list here. Yes. So the ones in red here are U.S. equities, and everything else is Canadian. So pretty simple to understand. The next tab here are my dividends, and this is where I track all of them, and my expected dividends from the companies I currently own, based on their yield and what they're paying out in their most recent payout. This is the chart I previously showed with our 62% month-over-month growth. So I want to see that that's going to obviously decrease as we get more data in here, but maybe we can keep that in the long term at 10% or something like this. Well, we can determine that in the future, and we can see that for every account I've actually done that. Broken it up into how many dividends we've received. So, and then we can see that in these charts here. And the most interesting chart, this is a little bit silly, but in the RSP account, we can see a clear increasing trajectory of the dividends. And I think that is because of the fund. The JEPI is now earning more dividends because of their strategic option selling. So that might change in the future, but as long as we are trending positive in all three of these accounts, not so much the cash account, I guess, yet, but all the RSP and the TFSA, there's nothing to really worry about. So this is the cumulative chart of all three accounts, and it's trending upwards, which is all we're concerned about right now. And this is something that I've just been doing in the past while, is randomly just updating my price of what my account is at. If you know how to do that automatically, let me know. I'd be very grateful. Maybe a button or something like that. But that will update this front chart here. So this is how I track my dividends in my accounts. I think it's fairly simple, but it's very easy to rebalance portfolios when you have this share target and what you currently own. I think it's very easy to see, and you can set your allocations to whatever you want. If it's 1%, 5%, 10%, whatever, right? So you can change that depending on your portfolio. So that's how I track my dividends. So thanks for watching and checking in on this portfolio. If you let me know what you want to see, whether it's ETF reviews or any news or just portfolio updates. Let me know, and I can do that accordingly. So please subscribe and like, and stay tuned for what's to come.